Stocks on Wall Street end the session higher as private jobs data strengthens the case for a Fed rate cut. The Dow gains more than 400 points. The Asian markets are mixed, while the GIFT Nifty, though, is indicating a lower start for our own markets. Crude prices rise as attacks on Russian energy assets weighed against the lingering view of an oversupplied market. Gold prices, though, remain steady, as do silver. A CNBC TV18 news break gets confirmed just months after getting relief from the Supreme Court. JSW Steel sells 50% stake in Bhushan Power to its Japanese conglomerate JFE for over 15,700 crore rupees. The management tells CNBC TV18 that the balance sheet will get deleveraged by 37,000 crore rupees post this transaction. Chaos at major airports across the country with more than 150 IndiGo flights cancelled, leaving thousands of passengers stranded. IndiGo blames a multitude of unforeseen operational challenges, including a minor tech glitch and updated rules for crew rostering. Pilots Association calls the situation an arm-twisting tactic on part of the airline to pressurize the regulator for further relaxations or dispensations in the new FDTL norms. And India and Russia are all set to bolster economic ties when President Vladimir Putin arrives in New Delhi on a state visit later this evening. India to push for increasing pharma, agri and textile exports. Prime Minister Modi and President Putin will also discuss a free trade agreement which could be signed in the future. A very important session that lies ahead of us today. You're watching Power Breakfast on CNBC TV18 in the Mumbai News Centre. I am Hormuz Fatakia. Let's first take a look at how the Asian markets have started off this morning. And it's a relatively mixed picture compared to the handover that we received from Wall Street overnight. The Hang Seng is down just around 0.25%. The Taiwanese index up by a similar quantum. The underperformance is coming from the Korean Kospi, which is down around 0.5%. But most of the other indices, though, barring the Nikkei, which is up over 650 points as we speak, most of the other indices continue to remain below the flat line, including the Shanghai Composite and, of course, the Hang Seng. So it's a mixed picture. Barring Japan, most of the other indices are trading with a bit of a cautious tone. We'll pull up the GIFT Nifty, and I'll give you an idea of how our own markets are likely to start off. Well, after that recovery that we saw towards the close of yesterday's trading session, the implied open is currently suggesting almost a 70-point downtick as we speak. But to set you up for today's trade, we are here to tell you about the trade setup, the stocks that you should be watching out for, and of course cues from the F&O side of things as well. And just as I mentioned at the start of the show, a very important session lies ahead of us, and I'll tell you why. This the weekly expiry of the sensex contracts. Not just that, it's the start of Russian President Vladimir Putin's India visit. It's the final trading day before the RBI policy tomorrow, and the final trading day for HUL as a consolidated entity before the record date of its demerger that takes place tomorrow. But the bulls would have gone into today's session with some hope because of the recovery that you saw from lower levels. The Nifty was up almost 100 points. The Nifty Bank recovered 420, but that is because of the private banking names, the HDFC Bank, the ICICI Bank, Axis Bank. All of them contributed to the recovery that was seen in yesterday's trading session. What held out in yesterday's session was the IT names. They were the ones that kept the Nifty losses in check for a better part of the trading session, and then it was the private banks that led the recovery towards the close of trade. The IT stocks were up, of course, because of the rupee. Another record low that it made yesterday, 90.29, then saw some support coming in and closed at 90.19. So that remains a key monitorable today. The Nifty again defended last week's lows of 25.850. So that is an important level to watch. Yesterday's low of 25.891 is an important level to watch. 26,000 on the upside, of course, followed by 2600, 26,150. That will be important to watch on the upside, and 59,500 for the Nifty Bank. So all in all, some important session that lies ahead. The GIFT Nifty, though, is indicating a gap down start. We'll ask Sudarshan in just a bit whether you could see some recovery in towards the close of trade. Over to Upasna now, who would list out the stocks that should be on your radar today. Upasna, good morning. What's on your list?
Well, good morning, Hormaz. Firstly, let me start with Petronet LNG. The company enters a 15-year ethane unloading, storage and handling services pact with ONGC, and here the company expects gross revenue of about 5,000 crore over a period of 15 years. Next up is IEX. On the back of its November update, the electricity traded volume were up 17.7% on a year-on-year basis. Next up is RailTel. The company's received work order from MMR region, that is Mumbai Metropolitan Region Development Authority, for a project amounting to rupees 48.7 crores. Next up is RVNL. Company receives LOA for 145 crore from Southern Railway. Next up is Godavari Power and Ispat. The company gets consent order for additional 2 MTPA iron ore capacity. With this, the company's total capacity has increased from 2.7 to 4.7 MTPA. Next up is JK Cement. The company at its Panna plant commissioned 3.3 MNTPA clinker line 2. With this, the capacity of the clinker has increased to 6.6. Next up is Biocon. It will be in focus as the board meeting is scheduled on 6th of December for an investment in Biocon Biologics, and even a fundraiser is what the company is eyeing on. Next up is Pine Labs. It will be in focus on the back of its Q2 numbers. Optically, the numbers look positive. The revenue is up 18% on a YoY basis, while on sequentially 5.5% growth is seen. PAT stood at 6% versus a revenue versus 5 crores. And next up is Translane Lighting. NCLT Mumbai dismisses the petition filed with Goodrich Logistics. So all in all, we'll be watching out for all these stocks in our today's trading session.
Vasna, thank you for that update. Over to Sudarshan now for cues from the FNO space. Sudarshan, good morning. You're spot on with that recovery comment that you made yesterday morning. What's the FNO data indicating today?
More than yesterday, today it seems like that we are heading for a tough session. In all probability, we are going to fall for the 5th straight day, because FNO cues are suggesting that FIs are heavily on the short side, and they continue to increase the positions on the short side. Look at the flows in the index futures. Yesterday also, they have sold more than rupees 2,600 crore. They have reduced their long positions by 1,100 contracts. But look at the short side. They have added short positions of more than 12,500 contracts. Now the longs exposure has reduced to 16%. When we had started the week, longs exposure was around 18 to 19%. On the short side, the exposure remains around 86%. Look at the options data. All the major call options have seen a fall in the premium. 26,000, 26,100, both these call options have seen a fall in the premium. On the put side, the most active option was 25,900. So 25,900 remains the important support. If we slip below that, next support comes around 50-day moving average of 25,600. Resistance remains around the record high of 26,315. For Nifty Bank, yesterday Nifty Bank along with IT, these two packs helped market to recover at the last hour of the trade. So support for Nifty Bank 58,850. Resistance remains around the record high of 59,900. One stock that remains in the band is Samant Capital. I have taken 4 stocks, 2 stocks, Biocon and APL Apollo have been seeing fresh longs, and Hitachi and Colgate have been seeing fresh shorts.
Sudarshan, thank you for that update. Then moving on to a confirmation of a CNBC TV 18 news break. Just months after getting relief from the Supreme Court, JSW Steel has sold a 50% stake in Bhushan Power to a Japanese conglomerate, JFE. But the details of the deal remain important, and Nigel is right here to tell us just that. Nigel, morning.
Well, that's right. JSW Steel and JFE, they have announced that 50-50 joint venture to house BPSL's 4.5 million ton integrated steel plant, which can be scaled up to 10 million tons. JFE will invest close to around 15,700 crores. This will be done in 2 tranches for around 50% equity stake. Well, let's give you an idea in terms of the valuation snapshot. The derived equity value of the JV will work out around 31,500 crores odd, while the net debt in the JV will be ballpark around 21,500 crores. That will include the existing 5,000 crores net debt that is currently sitting on BPSL. Hence, it brings us to the enterprise value of around 53,100 crores, which is the figure that the street sniffed, though it is not as straightforward as what the street would have liked to see. So the implied valuation is approximately 12 to around 13 times its forward EBITDA. Remember, JFE's earlier bet in JSW Steel paid off big time, because around 15 years ago, they had invested 4,800 crores for 15% stake, which is today worth a whopping 42,000 crores. So that's about the valuation. But how does the shareholding shift in BPSL post the deal? JSW Steel stake, well, it slips to around 50% from around 83%, while JFE holds the remaining 50%. JSW Group's promoter, they exit BPSL, but they get around 1.4% stake in JSW Steel, and so they build on to the existing 45.3% stake that they have in JSW Steel. Moving to the third point, how does it help JSW Steel, which will be most important? JSW Steel's net debt reduces by close to around 50%, while the EBITDA reduces by just around 11%. Let's explain this to you. JSW Steel's net debt drops from around 79,000 crores as 5,000 crores of debt is deconsolidated from BPSL. They'll also receive another 32,000 crores of cash inflow from this BPSL through JSW's consolidated EBITDA also gets reduced by around 11,000 crores. This means that JSW Steel's leverage reduces, big time. But the JV will sit with a debt of close to around 20,000 crores. The management has clarified that the JV's debt only is, they'll provide a letter of comfort, but there's no JSW recourse, which is important to note. So big debt reduction is what you're going to see at the cost of close to 11 to 12% of their EBITDA. Brokerages, they're enthused with the deal. Nuvama calls the deal value creative and says that it adds close to 37 rupees per share to their fair value, but they maintain a reduce with a target price of around 1,050 because of valuations being at a little higher levels and also the risk of earnings cuts because of prices that are weak. Motilal, they see strong positives as it supports JSW's deleveraging plan with its net debt to EBITDA slipping from a close to around 3 to around 1.7 by FY27. Motilal expects double-digit revenue growth and they expect things to look up for the company because of the capacity ramp up, the price recovery that they're factoring in. So they have a buy rating target price of 1,350. In fact, I caught up with the management, Mr. Jayant Acharya, the joint MD and CEO of JSW Steel. Let's listen in to what he had to tell me.
This deal gets 32,000 plus crores of cash into JSW Steel. It will be a deleverage of about 37,000 crores from the balance sheet of JSW Steel because some part of the debt is getting transferred to the SPV. This is for 50% of the equity, which JFE will finally own. The balance 50% stays with us. 30th September, our debt was about 79,200 crores. And this 37,000 crores of deleveraging, where 5,000 crores moves out of our balance sheet because it will get deconsolidated post to joint control. And the balance of 32,500 crores of cash, net of taxes, will come in to deleverage our numbers. So therefore, in the range of 36,500 odd crores should be the number which will be used to deleverage the asset or spend on alternate capex in the near future.
The management of JSW Steel there on that mega deal. Take a short break. All the action from Wall Street on the other side. Stay tuned. Welcome back on to Wall Street. Then it was a positive session for the benchmark indices, particularly the Dow after the ADP private payrolls data strengthened the case for a Fed rate cut next month. CNBC's Christina Parts-Invelos gets us a wrap of all the action on Wall Street.
U.S. markets were up across the major indices in Wednesday trading after a tepid jobs report spurred hope on Wall Street of a rate cut at this month's Fed meeting. The Dow gained 408, the S&P 500 was up 20, and the tech-heavy Nasdaq added 40 points. ADP reported private payrolls declined by 32,000 last month. Economists had actually expected a gain of about 40,000. Small businesses were hit the hardest. Companies with fewer than 50 employees saw a decline of about 120,000, while larger companies with more than 50 employees actually reported a net gain. This is the last employment snapshot before the central bank meets next week actually to decide whether to cut interest rates further. Sports merchandiser Fanatics announced it's launching its own prediction market in 24 states. The company says it will let people trade on events in sports, finance, culture. The first phase is actually was launched on Wednesday in 10 states. It includes contracts for economics, politics as well. Fanatics says it plans to expand to other areas early next year, including crypto, stocks, tech, as well as music. Prediction markets from the likes of Kalshi and Polymarket have exploded in popularity with the legalization of online sports betting. That's what's happening here in the United States. Back to you in Mumbai.
Christina, thank you for that update there. On that note, let's also listen to U.S. Commerce Secretary Howard Lutnick on his reasons as to why the private payroll numbers declined sharply this time around.
It's not tariffs. Remember, you had the Democratic shutdown, right? And what do you think happens to small business? The people who do business with the U.S. government, they know they're not getting paid, so they sort of slow down their projects. So you saw a little bit even of construction of small business down. So the Democratic shutdown hurt the numbers. And then remember, as you deport people, that's going to suppress private job numbers of small businesses. But they'll rebalance and they'll regrow. So I think this is just a near-term event. And you'll see as the numbers come through over the next couple of months, you'll see that all pass. And next year, the numbers are going to be fantastic.
Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back. Getting you the latest from the aviation front. Major airports across the country faced major disruption following flight delays and cancellations. IndiGo has seen the maximum impact with over 150 flights cancelled, leaving thousands of travelers stranded. Let's go across to Madhiya for the latest on this. Madhiya.
Well, so the large-scale cancellations is a combination of factors, and the biggest trigger, of course, is the new flight duty time limitation norms mandated by the aviation regulator. Basically, the pilot fatigue rules that kicked in from the 1st of November, and these norms increase the weekly rest for pilots from 36 hours to 48 hours and also restrict the night flying hours. The aim, of course, is safety, but the immediate impact is that fewer pilots are available on any given day, and once the flight starts getting delayed, pilots time out of their duty hours and can't operate the next leg. Now, add to that the Airbus software update issue, if you remember, and then there are new winter schedules, there is fog, there is longer taxi times at Delhi, and even minor glitches at airports. So every delay is pushing pilots beyond their legal duty limits. Now, the DGCA's review for November shows that IndiGo recorded over 1,200 cancellations, and many of them were triggered due to the crew unavailability. So IndiGo has acknowledged the disruption, and in a statement to CNBC TV18, the airline has said that a multitude of unforeseen operational challenges, including minor technology glitches, winter schedule changes, adverse weather, increased congestion in the aviation system, and implementation of updated crew rostering rules, had a compounding impact on their operations. But the pilot union has a very different view. They say that the airline already knew about these fatigue norms, and this is poor planning and probably an arm-twisting tactic for the regulator to relax these new safety rules. Now, IndiGo is saying that the operations should normalize in the next 48 hours. But with the winter fog setting in and tighter fatigue norms kicking in and the aircraft availability also under pressure, the next few weeks may remain challenging for the entire industry, Hormuz.
We look forward to those developments. Madhiya, thank you for that. Now, in the latest, Russian President Vladimir Putin will arrive in New Delhi later this evening for a two-day visit, highlighted by a private dinner hosted by Prime Minister Narendra Modi. The two leaders are expected to tackle a wide range of issues from shifting geopolitics to major defense deals, including discussions on fighter jets and a missile defense system. In fact, Parikshit gets us more on Putin's New Delhi agenda. Parikshit.
India and Russia are all set to bolster economic ties as President Putin arrives in New Delhi on a state visit. This will be Putin's first official trip to India since the war in Ukraine began in February 2022. The two-day visit is scheduled to begin with a private dinner on Thursday at Prime Minister Modi's residence. The leaders are likely to discuss a free trade agreement which will be signed in future. So what does New Delhi want from Moscow? First on the agenda is boosting exports of pharmaceuticals, agriculture and textile products. India is also looking for stable fertilizer supply chains with Russia, along with higher exports overall. The two nations are also likely to sign an MOU on migration to enable mobility of skilled workers from India to Russia, and also boost connectivity between the two countries, which will help trade. Non-tariff barriers, regulatory impediments, defense co-development and export of defense equipment, including the BrahMos, to third countries will also be discussed. Remember, trade between India and Russia stood at $69 billion in FY25, with India importing $64 billion worth of goods and services. So clearly, India would want Russia to buy more and bridge the trade deficit.
Parikshit, thank you for those updates there. I look forward to the visit later this evening. Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What's on your radar today?
Silver for sure, Hormuz, because we're looking at an all-time highs onto this one yet again. Almost $59 an ounce done. So with that, in the international markets, we are up by 103%. For the Indian markets, with the kind of run-up that we've seen and the depreciation in rupee, the silver prices have gained up by 113% for the Indian markets in the current year, and we still have most of December left to go. Well, the markets are working with a 90% probability of a Fed rate cut for the month of December. That has been supportive. And then when you look at the ETF buying, the investment buying in silver that we've seen for the month of November, clearly has been on a very, very strong side, and that continues to support silver for higher highs. The other thing that has been making all-time highs is copper. The LME copper has hit a record highs at $11,400 a ton. And with that, we've gained 34% for this year. Well, there are warnings of lower global inventories. Large quantities of copper is being shipped to U.S. in anticipation of tariffs from there. And then you have mine outages in Chile, Indonesia, and Congo. All of that quite supportive. A quick word on the crude oil prices, because that seems to be holding ground as well as Ukraine continues to attack Russian energy assets. And because U.S. and Russia have not reached a compromise on a possible peace deal with Ukraine, also is supportive.
Manisha, thank you for all of those updates from the commodities market. Take your leave on this edition of Power Breakfast. Thank you so much for watching. Bazaar Morning Call on the other side sets you up for the day's trade.